everyone, John Henry here, slingshotfutures.com, and welcome to the Market Mindset, where we take a look at the psychology behind the moves today so we can better understand tomorrow. And today, we're taking a look at the Dow. Now, overall, we have a lot of news coming out today. We've got, the FOMC is a relatively big thing to worry about. So going on 2 o'clock in the afternoon, that's 1400 Eastern, that's when you might want to be a little bit careful because things can get kind of shaky, to say the least. Now, yesterday, we had a nice downward trend working its way lower, and we found a base later in the afternoon at around 2 o'clock and a big reversal to the upside. That led into today's gap higher with a fairly strong start to the day. It looked like they may want to try to take it up. But the follow through, it's okay. Could have been a lot better, but it's okay. And then they get this. And that's when things start falling apart. Generally, when you're looking for a strong morning trend, you want to see good, strong bars back to back, keeping that thing going. Kind of like what we had here. Big, strong bear bar, and they're big enough where they completely engulf the morning trend. That kind of stuff is important. In this case, the buyers just didn't get it. Now, there will be sellers that sell that first turn down. You know me, I'm not a huge fan of being the first one to the party. I'll let other traders do that for me. They drive the market down. The buyers try to pop back up, buying off of the lows of bar 1. And that failed as well with a big breakout move down. And that triggers in a lot of sellers. The fact that we have turned down twice now, the buyers have failed to even defend the lows to get back up to the highs, showing that earlier weakness. That's a big clue. And now we're looking at sell side potential, and it may carry on for a while. Big breakout move does mean higher risk, but selling into the move, looking for good continuation to the downside makes a lot of sense here. Now, if you weren't comfortable taking that amount of risk, it had a really good follow through. There will be sellers that sell there as well, but waiting just a little bit longer gave you this kind of interesting little bear candle. The buyers tried coming in, it went higher, and then closed smack down on its lows. Very bearish indication. Sellers will sell underneath that. You'll notice something, it never triggered. So it never triggered in the sellers to take it down. The buyers try one more time and it completely falls apart. So really, this was nothing more than just sellers taking profit. That's why it wasn't very big. And when it turns down like this, that's the sellers re-entering to drive it back down. And it doesn't matter, what's in the way. This is the kind of freight train that you want to stay out of, at least going long. But you want to jump on board if you're looking at going short. And sellers drove it down into major monthly support, as well as yesterday's close. So they fill the gap, they get a big drive down, everything is all hunky-dory for the sellers. They've been pounding the market lower. Now, the buyers try coming in again. Their follow-through is a doji, and then when it finally does trigger up, they get a big bull candle. Now, likely, given how aggressively bearish this is, and the fact that the first bounce was sold so heavily, sellers may chase this and say, you know what? If the buyers can even trigger up, I'm going to sell into it. And that looks like to be what they did. Very aggressive bear turn lower, but the only way to get into it would be to sell at the highs. So not an easy trade to get into. Now, better yet, when they get that massive bear candle, now we know, well, it's a bear engulfing candle. Most of the move is probably done. Sellers don't want to sell way down here. They want to sell up here to take the move lower. So we get a little inside bull bar. Now that inside bull bar, completely inside that bear breakout move, it triggers in the buyers. Again, we're not interested in going long. We're only looking for short opportunities right now. It triggers in the buyers, one tick above, and then closes smack back down on its lows again. Another sell opportunity to try to get at least one more attempt at the lows, and that's about all it gave you. So just a beautiful day of trading on the Dow. Everything else was really slow. If you were watching crude oil today, man, I hope you had a lot of caffeine because it was a slow, grindy one. Even the inventory candle was only 35, 40 ticks, really small. Gold was pretty grindy as well. It had a nice breakout move, but all in one. So really, the indices were kind of the key. They were the only ones that were really moving well. So again, great day of trading overall. Nice combination of technical analysis in conjunction with market psychology, knowing where the buyers are getting trapped in, and then shoving it right back down in their stops. Hopefully you found it useful. Hopefully you found it entertaining, and maybe you learned something, and we'll see you next time.